We're all here. It's the big show on Tuesdays at 1. Welcome in all of you all over the world. Paul, did you see Logan Paul get his, was it Jake Paul? Who got his ass kicked this week?
See, that's the thing. I don't think he got his ass kicked. Logan Paul did really well in that fight.
What's his name?
Now, he was hanging Floyd Mayweather.
Yeah, he came out and he was like, I was very impressed with
Yeah, he was like, I was
I got a
surprised
surprise now. He came down to the ring.
with a Pokemon card.
Mo, he came to the ring with a Pokemon card. So today I brought the
Except his Pokemon card was $1 million.
I bought the Lotus today I'm wearing in celebration of all things trading cards.
How much is that thing worth?
I recently traded this. It was a value of $17,000.
So you actually got it.
Yeah, this is the card right here.
I thought you were still negotiating it.
No, this is done. Done deal. This is a flower, baby. There it is for all our Magic nerds out there. That's what I'm wearing today. So, okay, guys. Okay, great. I see. Here we go. The Black Lotus is fake. You guys are hilarious. Welcome in. What a day for Biogen yesterday. Mo's been talking about it. We did a full video on it this morning to bring to you guys tomorrow, I assume, Tim. I own 20 shares of Biogen. I was, of course, pleased. My son Gio was not. He sold his Biogen recently, so he was a little sad. But that's the case with Biogen, and we can certainly discuss any questions you might have, where it goes. You know, Mo has shown a little bit of hesitancy on this drug coming out, this Alzheimer's drug coming out. And so, yeah, we're a little... Anyway, that's our take on Biogen, and you'll hear more about it. What else, guys? We welcome you all, and the patrons. You know, everything's going well over in Patreon. I am Mo. You might see me. I'm tickling my feet in that in the trading in the Bid and Ask Nation, and so we're looking at some Bid and Ask stocks. I won't spoil them now, but we definitely have some looks. And if you're not following along in the Bid and Ask Patreon tier, Mo is keeping us on a day-to-day with the employed trader, what to hold, what to short, what to have on our radar. Mo, talk about that a little bit.
So what it is basically is I wanted to give you people that don't have the time to sit at the computer all day or just getting into trading, but you want to trade. I'm basically doing it for you. So I don't want you to blindly follow me. I want you to understand. But basically I have 5 stocks and we go up and down, long and short in those stocks all throughout the year. And there's daily updates, well, market day updates. And those come out around 2 o'clock. It's video. So it's great.
We are taking stock requests today, individual stock requests for a $50 donation. Today's nonprofit will be, again, one of my favorite nonprofits, which is the Beth, will you tell the Akron Children's Museum that we are raising money for them? This is a local Akron-based museum that focuses on STEM, science, and technology for young kids out here. A couple friends of ours started it from just a thought to thousands of visitors per year. Obviously, they struggled in COVID, but the money today you'll be donating to Here Stocks, a $50 donation, will be going to the Akron Children's Museum to help science and technology for kids in the area, which is we're huge supporters of. So yes, I am wearing the Lotus. I guess I could just sell the Lotus, Paul, and give it to the Akron Children, so they'd be open for a couple of years. But I do like playing with the Lotus. So I present to you the seer of seers, a prognosticator, Paul Gabriel.
So guys, I'm trying to get that blue check mark on Instagram. Paul Gabriel, TraderMo_EM, Sefter Channon. Follow us, feed my ego, because I want that blue check mark, because I know people with like 8,000 followers who have a blue check mark. So a couple software updates first, by the way, guys. The software is going tremendously well. Those of you who are patrons are getting the screaming deal of all screaming deals. Those who are not the patron yet, you're crazy. This is amazing. You get incredible stuff for $24 a month for my level, $68 for Mo's level. The price is going up every single month. We have 3,100 subscribers right now. It's going incredible. We are working on the app currently. We're working on the stock analyzer tool. We're working on, I put it in the Discord and the Patreon. Everything's going great. We're ahead of schedule on everything that I posted. But again, I'm not going to guarantee anything. So the bottom line is the software is awesome. Keep with us. This is something you're going to have for a lifetime. It's going to help you in your investing for the future. We're going to use the Excel sheet that I use for Stock Analyzer tool today, but it's not on the website. It's on the website currently on the development portion, not your portion. I'm not going to use it on the website because it hasn't been touched by our designer yet, so I don't want to show the rigmarole it's in, but it is working and it's going great. So this is awesome. Again, follow us on Instagram right here. I post about my dogs. Pretty much is all I post about.
Again, on Thursdays for the top tier patrons, people in the Bid and Ask and Paul's Super Shorts, we always go live at 2 p.m. Eastern for you guys. A nice, discreet, like nice little calm live of about 50 to 70 folks, and all three of us take your questions. So Patreon only live stream on Thursdays at 2. And our next fireside chat is Friday, June 18th at 6 p.m. Friday, June 18th is the fireside chat for the three of us taking all of your all the patrons' questions for about 90 minutes that night. So, Paul, we don't have any donations at the moment. We have a couple. Steven said Lego. I don't know if he actually wants the Lego company, or just saying let's go. But
I think he's saying let's go. Let's go.
Great. I love it. And of course, I did. Oh wow, look at this, Emerson Clove. If people want to know a little bit about Clove, we can certainly get to that. I did spoil the news, Paul, that you and Mo did attend that crypto conference in Tucson.
Yeah, it was so hot
this past weekend. And as Stock Mo would say, in every video you have massive news when it comes to crypto.
Yes. So after attending this crypto conference in Tucson, I have recently updated my cryptocurrency projections. I believe that Bitcoin on a per coin basis will hit $7.4 trillion, which means if you have 3 of them, you will be larger than the US entire economy. I think this is a conservative estimate. I don't know how I could be wrong, right? I mean, I think it's impossible I'm wrong. So $7.4 trillion per coin. If you own 3 of them, you will be larger than the US economy. So that's my projection.
Yeah, that's great, Paul. I was looking forward to that. That is massive news. So with that said, Paul, speaking of that, I would say is maybe a small PSA, Mo, and is that I wanted to get your thoughts. Is we awoke a gorilla this past weekend when we brought up, good Lord, the fundamentals behind AMC and the short squeeze. And we learned very quickly, of those of you out there, that this is well beyond the rationale of looking at a company like it's a company, and that this is a movement, Paul, of normal folks looking to really stick it to these
Wall Street guys.
Yeah.
So can I make a comment about that?
Please do.
You know me, I'm pro-capitalism. But I actually dislike Wall Street immensely. I think they're conniving. I think they're salesmen. I don't think they care about the average person or the average investor. I do not like them at all. So I can understand the idea of being anti-Wall Street. But does that mean that a bunch of meme followers are going to beat Wall Street?
Can they be successful?
Of course they can be successful. Are they going to be? I don't know. Remember, we live in a society of where we have to sit there and you get benefits for things, right? You make decisions based on the benefits you're going to have emotionally, financially, personally, whatever it is, you're going to have benefits to it. And there's still a lot of benefit for Wall Street because the market has dictated that to be. Now, your job out there is to listen to people like us who explain to you how Wall Street is using their information to make more money off your backs, and they're misleading you with their information. That's what you have here. I'm actually more anti-big business than anybody would ever guess I am. I don't think there's a real conscious effort to look after the average person. Not that they should, but they tell you they do, and it's a lie. Look at what they do, not what they say. And I just don't think, though, that going after them and saying the short squeeze is going to screw them. I just don't see that being the case. I could be wrong, but I would just be careful about that. I think it's a justification for the movements that have happened. Does that make it right or wrong? I don't know.
And when you say the short squeeze is going to screw them, yeah, maybe if the big institutions and the brokerage firms didn't halt trading and do things that they probably shouldn't do, but are going to do anyways and protect that every single time because they know who the biggest payers are and who's going to pay the bills. So
look at Robinhood. Robinhood was started purely
for the common man.
And then all of a sudden people went, wait a second, it's not for us. Guys, at the end of the day, these guys are still trying to make money. But that's why I encourage you guys to come to us. We were just talking about this at lunch. I'm all in favor of profit. I'm trying to make profit on our software, absolutely. Last month was our first month of profitability. But remember, the reason you should listen to guys like me is, and not the other YouTubers is, I have 8 businesses upstairs, hundreds and hundreds of units of real estate, tons of stock, not tons of stock, but cash. I don't need this money, so I'm telling you exactly what I think and why I think it. The other YouTube hype people are going to sit here and say what they need to say because they know they need to get videos out there to get views, to get revenue coming in. They don't have any other source of income. That's why they do those things. So always look for what incentives are there. My incentive is to make money, but I'm going to tell you exactly how I feel because I want to find the several 100,000 people who believe in what we're doing, because that's all we need to have a very, very successful YouTube channel. I'm not trying to have 10 million subscribers. I'm not trying to run for governor of California. I'm not trying to do any of these things. I'm doing it because I teach at my high school, and I'm going to be teaching at a law school here in the fall for free. Literally 100% for free. I love teaching. This channel just happened to come out of my desire to teach people, and all of a sudden it was like, oh shoot, I can make money doing this. Awesome. I'm still not going to turn on profit, but look at why I do these things. I do these things, and you'll see a very consistent message over hundreds and hundreds of videos, a very consistent message. Does it get boring and redundant? Absolutely. But I think that works. So always look at why people do things and their actions. My actions have been very consistent. Look at Intel. I was a buyer of Intel at $45 a share just 8 months ago. What did I announce my price was today? Mo, do you remember?
55 to 90 or something?
I think 58 to 90. And I was like, okay, well, my price for Intel has gone higher. Why? Because the information changed. I factored in more, new information came out. That's what you're going to hear changes from me is when new information comes out and sit there and factor that in. Not emotion, not any of that stuff. So that's why I believe in it.
Yeah, that's what take, folks. Other people are saying, by the way, collateral damage of this AMC going up and down is AMCX, which I forgot, Paul, is
Love AMCX.
It's a little book stock, which I've owned. And
Mo and I loved AMCX at $20 and $25 a share, and I actually ran the numbers today. And if they continue, so let's pull up my stock analyzer tool.
Sure, will you erase that board when you have a chance?
Maybe.
While Paul's doing that, guys, again, tune in later this month. My little book that beats the market stock portfolio of 150 grand, which has grown to 260 grand in the past year. I will be selling this off and then rebuying my new companies at the end of this month, and we'll document all of it for you. Of course, patrons will give you the super secret insight into what I'm doing. So that'll be happening at the end of this month. Pretty exciting, Paul. I've been waiting for this day for a while.
All right, so this is the Excel sheet that's made to figure this all out. We put in the ticker symbol. And then we look at different numbers here, revenue growth, income growth. It's all these growth numbers. Now at the left here, I'm going to ask you either for your assumptions or the discount of the growth. So base case, 50% drop in growth for the next 5 years, 25% drop, keep it the same. Share buybacks. They did minus 12.86% a year in share buybacks. You drop that in half, drop that by 25%, keep it the same. Same with profit margin. The profit margin last 5 years was 13.2. Cut it by 20%, 10%, or keep it the same. Net present value. This is the return you want to make on the stock. 10% is historical, put that in there. And what future PE do you want to sell the stock at? I'm just calling it 15. Here's the interesting part about AMCX, and I'll tell you why it jumps up. My prices for AMCX, a base case of 133, a high case of 255. Now, a lot of you out there are going to go, I'm going to go buy it. No. Go figure out what could affect this. The share buyback is the big thing, in my opinion. That's what's really driving this per share price up a high amount. So they have to go figure out, are they going to keep their share buybacks going? These are the things you have to look at. CapEx growth has decreased. Operating cash growth has increased. Annual free cash growth, 11%. So they're doing some good things here that I like, but it doesn't mean you just go based off this number and only buy this. If you want to do that, pick a basket of 30 stocks that fit your criteria and do that in general, because you'll be right on a lot, you'll be right on a few, wrong on a few, and a lot of them will do pretty much what you think. But this is AMCX. According to our share buyback, including share buybacks in here, it really increases the price of the stock. The question is, do you expect 12% a year for the next 5 years in share buybacks? I doubt it. And that's what you have to figure out here. That's why I don't think that's a reasonable assumption. However, there's still upside potential if they cut it by, let's say they do the share buyback rate is 30% of the future. Yep, 30% of the future. It still makes the stock a $113 stock. If everything else, all the other assumptions do as I say. So remember, guys, all this does is takes your assumptions and spits out a number based on a return. Do you want to make 20% return? Tells you to buy it for 73 bucks. So even buying it today, assuming all these things, you're still going to make a 20% return on the money if everything else hits. That's all it is. That's why I say it's only about the numbers. At the end of the day, Every investment is the present value of all future cash flows. That's it.
We're going to get down to the nitty-gritty here. We welcome everyone in from all over the world. We thank you again for watching. Paul, we have 2 donations coming in for Akron Children's Museum, helping kids in Akron experience STEM activities and fun. And it's a wonderful nonprofit here in Akron, Ohio, which we love supporting. The first stock will be, Paul, it's a Reit, and that's okay. The ticker is IIPR. This was brought to us by Sneak. He gave a $50 donation to see Innovative Industrial Real Estate Investment Trust Company out of San Diego, which is, it's German for, no, I won't, yeah. And it's founded in 2016. They have some subsidiaries, and they are Reit, Paul.
Look at that stock price since 2016. Holy cow, 16 bucks to now it's at around 188, 190.
That's a 900% gain in the past 5 years. So let's take a look at Innovative Industrial Properties.
Okay, so let me make the screen a little bit bigger because I know Uncle Seth always wants me to do that.
Thank you.
$4.5 billion market cap. Now, guys, I want to explain something about REITs before we go forward. The interesting thing about REITs is they have depreciation in there that's actually more than just, right now when a company spends on capital expenditures, they cannot expense that money necessarily day one. They depreciate it, but it's still money they put out. With real estate, when you buy a property, the government allows you to depreciate the value of the building. So let's say you buy a property for $10 million and you say the building is $8 million of it. They let you deduct that $8 million over a 25, 30, 40-year period of time, depending on what size the building is, et cetera. So with REITs, there's that extra depreciation there that might not necessarily matter. Now, some of the depreciation is from capital expenditures, from making the property better. That depreciation stays to stay in there. But the depreciation from just buying the property and depreciating it, that's where you get it confusing. You'll probably have a higher PE than normal. And look at that. What's the PE? 56.5. Because that depreciation expense on the building's purchase is driving down the profit big time. Driving down the profit big time. So I don't want to necessarily look at it like that, but we'll talk about these in general.
If this is the first time you've ever joined us, we're going to use our 8-pillar analysis of a stock to look at the fundamentals, the math behind this company, and see if this current stock price is warranted, in our opinion, of course. So pillar number 1 is PE ratio, which we want less than 20, which is an X in this case. And we'll move on to pillar number 2, which is, Paul?
Profit margin.
Look at that.
57.5%. With a gross margin of 96. I can attest to this. In our real estate deals, every time we rent an apartment, our margin's like 95% of that money, because what does it cost? We have a high fixed cost in real estate. So this makes perfect sense. You know, any utilities, you're probably already paying anyway. And if you're not paying utilities, the tenant's paying it for any house, so it doesn't really matter. So very high margin. So an X on PE, a check mark on profit margin. Now here's the deal. The rules for REITs are they have to pay out 90% of their net income every year to their shareholders. So their dividend tends to be pretty high. 2.5% doesn't seem too high, but I don't know. 114 million a year. Now, let's go to their income statement.
Pillar number 3 is revenue growth over the past 5 years.
Oh my Lord.
Look at this. $1 million?
That's what it says. So guys, this is all because of growth. So one of the things I want you to understand when you do this is go look at how the same properties grew from year to year. Because a lot of this growth is all from acquisitions, right? But I'm sure some of the properties they bought grew from year to year as well in terms of the revenue. Figure out how much that was.
Pillar number 4 along the similar lines is profit growth over the past 5 years, Paul?
They lost 9 million, they made 80 million. Check mark there. I'm gonna wanna look at this company, since it's a REIT, more on the cash flow it generates. That's how I'm gonna look at it.
Pillar number 5 is shares outstanding. We want this number going down, Paul.
Now, it's a REIT, guys. It's always going to go up because as they get more and more shares, they buy more and more properties.
Say that again.
It's an X. 3.35 million to 24 million.
Yeesh.
Yeah.
Okay, that's an X. How about current assets over current liabilities is pillar number 6, Paul?
122 million versus 100 million. Check mark there.
Nice. Very good. Okay, now free cash flow. This is what you wanted to see.
Okay, so their free cash flow, guys. Wait a second.
Cash from operations minus capital expenditures, Paul. You know this.
Yeah, I know. I was looking at something else. 2.3 million to 133 million. Guys, I'm not looking at the average over the last 5 years. This is ridiculous, right?
Yes.
I'm going to take this last year and multiply it by a factor of, I don't know. This is why REITs are very difficult, guys, because they can grow very quickly just by buying more properties, right?
I see.
That's not a real like growth thing. That's not organic growth. A lot of companies grow through acquisitions, but with real estate, it's especially easy. It's not like it's hard to buy another piece of property, put a management team in there and grow, you know what I mean? So, and when they do that, they're probably issuing more shares, et cetera. So you're not really getting apples to apples. What are you thinking about, Seth?
Well, so just to explain, this is our pillar number 8, is we want to take this free cash flow, multiply it by a certain multiple, a lower number for slow growing companies, a higher number for companies that may be considered more growth and more potential. I'm wondering what you're coming up with this one. I was thinking, is it just 20 is our multiple here, or you want to go lower?
This is where I get stuck. This is where I need to understand more about the company itself, what their current portfolio looks like, how much debt they have on it, what the market value is, because you can't look at their balance sheet to see a market value of their properties. Why? Because if you buy a property for $1 million and you put it in the balance sheet, let's say it stays at $1 million in your balance sheet. Let's say it's worth $10 million. What does it show up on your balance sheet as? Anyone?
I didn't hear your question. I wasn't paying
So
attention.
let's say in a piece of real estate, when you buy a property for $1 million, let's say there's no depreciation. It's on your balance sheet for $1 million. 20 years later, it's worth $10 million. What does it appear for on your balance sheet 20 years later?
$9 million?
$1 million.
Oh, really?
That's a very common theme amongst value investors, is where they can look at assets and go, wait a second, this company has depreciated this asset. They have 10 office buildings in Silicon Valley. They've depreciated all the way through. It's on their books for $100 million. They're actually worth $5 billion. There's hidden value there. So that's the issue about real estate on REITs, is figuring out, like, can you find a hidden asset value there from the fact that they might have owned these properties for a long time. Now, granted, they only go back to 2017. And also the job for real REITs is they want to buy and sell assets. They get fees off of it. It's a very lucrative business for them. So they want to do that. But how much for this property? I mean, what's the market cap?
Well, at a 20 multiple, we're at 2.6 billion.
And it's at 4.5.
And the actual retail price is 4.5. So it's probably, even with not so much outlandish, but non-conservative, liberal foresight
Valuations, it's still high.
Thank you, Paul.
Now the question becomes, this PE here, 56, what should it be since they have depreciation? I don't know. It all depends on how much they attribute. This is why REITs are hard. You know, people always ask me for REITs because they're very attracted to that dividend. Oh, this is a nice dividend. It's not as high a dividend as I would have expected. I would have expected a 4 or 5% dividend rate here, right? So it makes sense that maybe it's double the price it should be. I'm just looking at saying, I mean, I don't know, price to sales is another thing to look at. What's the enterprise? It's just, my gut tells me this is overpriced. I'm not going off of based on any sort of deeper analytics, and this is part of the process we're trying to teach on this channel, is going in deeper and deeper into these 10Ks, especially for REITs, to sit there and look and say, what are their assets? What are the assets behind them? All these things that happen, figure it out. And but my gut tells me this is overpriced.
Mo, are people trading this into bid and ask?
Actually, it looks pretty good, except for this bid and ask difference of 42 cents.
Too big of a difference.
Huge, but it is coming up through your sweet spot very nicely. You almost had an engulfing candlestick today, so probably tomorrow or something like that, you'll get one. Yeah, go for it. I mean, you're going to face a little bit of resistance when you're going into this 198, 195, whatever level that is, but this is actually not that bad, and you do have, once you get over that resistance point, you have all of this area to work with. So, I mean, this can probably go to 220 or something like that if you can get a little run on this. So, I don't know, maybe you guys want to throw this in the Discord chat, but the only thing I don't like is how high this is getting. This is like plug that we were talking about earlier. The stochastic is getting very high. Now, can it slow down or can it start to go sideways? That would be great if it did. I don't know if it will. So,
we'll David Lose has a good question. Do you think there are benefits for REITs over individual buildings? Absolutely. You owning your own property is a lot more work. It's a lot more hassle, but you're going to make more money usually. REITs, it's just let the people do what they do. You buy into it. It's a pretty steady stream of dividend. But I would look at REITs the same way I look at ETFs. Wait for big sector changes and sector drops, and then try to pick up these assets at cheaper prices. That's the way I like to play REITs. For example, if all of a sudden industrial buildings become like the worst thing in the world, you don't want to touch them. Usually people over-exaggerate it. The price will go from $80 a share down to $12. Pick them up then. That's the kind of time to pick up these specific sector. I look at a REIT like an ETF. Use it to look at the market and say the market's mispricing an entire sector. Let me go do that. Does that make sense, Seth?
Yeah, for sure. People have very much been asking about REITs a lot, and we're going to learn more this as the year progresses about them, until we can bring you this content for sure. So,
well, I think we know a lot about REITs. It's just a matter of how do we explain it to the average person of saying, listen, the dividend yield's attractive, but the depreciation part's the confusing part, because not many people understand that depreciation part. Would you like me to explain it further?
No, I think you're good.
Okay.
That is our take on innovative industrial REIT company. And we'll take a look at the trading, Paul, or Mo. It's interesting over there.
I remember, everybody,
it's interesting
no
for
banks, no utilities, no energy companies. It's funny. Every value investing book I read by every value investor says, pick the companies, pick sectors that you understand. And it's funny, I'm reading a new one where the guy says, I don't understand commodities or energy because I can't understand non-cash flow or fluctuating cash flow based on a commodity price. What do I always say? And I laugh because Warren Buffett's very good about figuring out commodities. I am not. I just like to stick to, I'm like, listen, I don't want to stick to that. It had to be a very glaring situation of a big conglomerate for me to go, okay, I can understand a long-term stable cash flow.
The next stock is Abbott Laboratories. This is brought to us by Dane off the request line. A $50 donation is going to Akron Children's Museum this week. Abbott, of course, is a national laboratory. I almost worked there, Paul.
Really?
With the PhD, the chemistry thing. Their headquarters is in Chicago. They founded in 1888. This is Abbott Laboratories, and the ticker symbol, Nate, is ABT, Abbott. Let's take a look. It's a medical device company. Go ahead, Paul.
So they're almost a $200 billion company, 195, right?
Wow.
Net income, PE 34, that's an X. Healthy profit margin, 15% with a good gross profit margin of 57%. Dividend yield of 1.4%. So they have $2.7 billion they need to spend every year on their dividends as of right now. So something to keep in mind when you look at the free cash flow, because remember, folks, dividend yield is not secure. You got to look at it through the free cash flow. Can the free cash flow support that dividend yield? So we have one X and one check so far.
Pillar number 3 is revenue growth over the past 5 years.
19.9 to 37, check mark. I would question on these big jumps, and on this big jump, if there was an acquisition made somewhere along the line, you'd find that in the investing section of the cash flow statement. Because remember, we want to focus on companies that you want to strip out the acquisitions. They're not really growth, but it's just something to consider as you go along.
Profit growth, pillar number 4.
Profit growth, 1.5 to $5.7 billion. Holy cow. Wow, that's a big jump. Over tripling their 3.6 times their net income growth.
Where can people find that Excel spreadsheet, Paul? That's not in the Patreon yet, but...
Guys, it'll be part of the software very, very soon. It'll do all the work for you, give you all the data. You just put in your assumptions. It will be there very soon. Get the software, because the second that comes out, I might jump the price of the software because it is so valuable. It's probably our most requested item in the software, and we're doing it very soon.
Great to hear. This software is available as a part of our Patreon. Join the Patreon, you get it. Pillar number 5 is shares outstanding, Paul. We want that going down.
Now, here's something interesting, Seth. It's going up, but not by very much, with big jumps in revenue. So they had an acquisition. I don't think they used shares to do that. 1.73 to 1.78. So it's an X still, but very, very small amount of shares increasing. Very small.
Would you assume maybe they had excess free cash? Is that what you're saying, if they made an acquisition with it?
Maybe so. Well, look, or took on debt.
Current assets over current liabilities. Let's take a look.
21.8 billion versus 12.4. Chickadee check. All good there. All good in the hood.
I love when you say that. Okay, free cash flow growth, the granddaddy of them all.
Okay, guys, ready? 2.7 to 7.6.
Lord.
Check mark there. Now, the average is 4.3 times 20 equals $86 billion.
Good boy.
Right? So that's an X. However, look at these big jumps. Do you think this is going to continue on?
Uh-oh.
If you do, I would go more closer to 7.6 billion, right? Because these are big jumps here, Seth. Do you see this?
Yeah.
Now, granted, they did 7.6 back here. So let's say it's 7.6 times 20. That's $152 billion, right?
Yeah, the market cap is still $200 billion.
Yes, it's expensive. We saw that in the PE. The price of free cash flow, too expensive. Remember, guys, we're going to go to our 8 pillars. Look at these checks. We have 5 checks, 3 X's, and the 2 big X's are the valuation metrics. They're selling at 45 times the last 5 years' price of free cash flow. Now, I want to pull up the, let's pull up the shares. Let's pull up the stocks, ABT. So annual revenue growth, 13.7%. Let's see. Current price is 108. Shares, they increased their shares by 4 points. Okay, something's wrong in my calculation here because it's not 4.77%. Either way. All right, we'll figure that out. 5-year average. Now here's another thing, guys. Look at this. The recent 4-quarter profit margin was 15.3. The 5-year average was 9.4. So this is part of the things we're going to include in the software. Look at these comparisons. If I'm looking at this, am I going to assume 15% profit margin, Seth? When the last 5 years has been 9.4?
Oh boy.
That's the thing. We're going to also show the 10-year profit margin too. Because I don't want to have, and we saw there was profit every year. There might be one year, like for example, COVID last year hit, right? So in the future, the previous year's profit margin is going to be skewed heavily. So these are the things I want people to understand when you're making your assumptions, what assumptions you make. I think, to me, assuming a 15% profit margin, unless there's a specific reason that you find in your due diligence, is a little aggressive on a profit margin. I think you need to be closer to that 9 or 10% range. Why wouldn't you? Because that's what they did for 5 years. The stock is currently at 108, and we have a very low price. Now, the shares outstanding is the big issue. Let's go here and put that in there. It's still low. It's still high. Shares outstanding will kill you. I have a high side of $30 a share for this company. Oh, I was assuming 20% return. I'm sorry. Hang on a second. I was assuming a 20% return. Let's assume they keep shares the same. It's got to fall in half. And what was the PE? 35?
Yeah, 30.
Cut it in half, it goes to 17. Makes sense
Right
here.
where we want it, yeah.
Yeah, makes sense there. So this is all just numbers. This is all just numbers. I think the shares outstanding, we have to figure out. The shares outstanding is correct on the calculator. Yeah, I don't know how that, I'll have to figure that out. Either way, Mo?
Yeah, Mo, before we get to that, Caden's asking if I buy the Patreon now, does the price go up? No, when you get into your Patreon tier, you are locked in, and we are making moves on our end to get you off of Patreon so you don't have to deal with their malarkey in the very near future. Oh, go ahead, Paul.
This is why, guys. They did have a big jump in shares outstanding here.
Tell us those numbers.
1.48 billion to 1.727 between the end of 16 to the beginning of 17. That's why the annualized rate, I thought it was wrong. It's correct. They probably made an acquisition at that point. So this is why you do more. That was a red flag. I mean, look at, this is exactly what I want to see happen. I was like, wait a second, how is their shares outstanding growing by 4.7% a year? That's when I sat there and said, yeah, I'm going to strike that. I'm not going to worry about the 4.77. They clearly made an acquisition there. I'm not going to necessarily penalize them for it. So keep it in mind, but go find out what their shares, their share goal is for buybacks if they're going to do it. The other thing is, what was their free cash flow? We said average was 7. They have plenty of cash on hand, plenty of free cash flow to pay their dividend. So they might be buying back shares at some point. So I do think the price of falling in half sounds about right.
Mo, were people trading this? What's going on over there?
Yeah, I actually like it. Something happened last week where it gapped down like that. So that gap needs to fill. We're below this 32% line. So once we start moving up, and I do think that this gap will eventually fill, we can start making candlesticks like that, move into the sweet spot. You'll face some resistance at that 118 where it fell from, but then it has room to run. So if you're in the Discord, please put this in there. This is going on my watch list.
Boy, I love when these things happen.
Yeah, it's just going to be a watch list stock. Somebody put that in there and tag me, please. This is a good one.
Boy, Mo, we got some bangers today to get your
This is actually a good one because there's like potential here, and the stochastic's not up here, and we don't have to squeeze like some crumbs out of the cookie jar. We can actually make some money, hopefully, more than 2%.
Yeah, I also love it when I see something goes, oh, is that an error? And no, there's an explanation to it.
Yeah.
And that's what we're trying to teach here, guys, is use the data in front of you to tell a story. That story will tell you how to assume the future. And look at the assumptions for the future. It'll give you a value for the stock. Your goal as a value investor should be to buy at a massive discount to value. Your goal as a regular investor is to equate the market and buy at a fair price. 108 doesn't seem to be a fair price for Abbott Laboratories as of this very second. Assuming even the best case scenarios, I don't think it's going to work.
I want Abbott to be in the sweet spot, but in terms of long-term hold, Mo, but I'll take it. Let's do this. Let's take a short break here, guys. Real quick, if you like what you're hearing, make sure you fondle that thumbs up as always. For 500 people out there watching, if we go over to Mo and this sounds like complete nonsense with this chart, it was to me for months. But if you want to watch the Employed Trader, if you want to watch video series, is the Trading 101 down, Mo? It's just for patrons?
Yes. So that's only for patrons. So if you're in my tier, I did an entire trading series, which I want to redo. But it starts at the very, very ground level of all of this and builds up to
what these numbers
wherever.
mean, what these graphs mean, what these candlesticks means. But in general, the more you practice on this stuff, if you're drawn to maybe a more aggressive trading or at least more active trading, you can join that middle Patreon tier. And Mo basically announces your trades, right, on a day-to-day basis.
Yeah, the second that
personal videos from you, and go ahead, Mo.
The second that I click a trade, you guys know about it. And any trade that I make, the second that I click it, you guys know. Anytime I sell something, you guys know instantly. So that is a great perk for you guys.
Great. Okay, guys, that is our take on Abbott. The next one, Gary, an OG patron. We love you, Gary. He wants to look at, Paul, he wants to look at MIC. This might not be right. He said MIK. I typed in MIK stock and it went to MIC. KEY, MOUSE.
Michaels, MIK.
Is that it? Sorry. Okay, thanks. I typed in MIK stock in Google and I got a different thing.
Remember, they're being bought though.
I thought that happened already.
It did happen, yeah.
Did it close already?
I thought that happened 2 years ago.
It looks like it. No, April 13th.
Really?
Yeah, just recently, because my son owned Michaels.
Can you pick another stock?
Yeah.
Oh, yeah. You're not going to get any movement from this price right here.
Okay. While we're waiting for Gary to come back around, Owen is looking for SYNX stock. This is off the request line, folks. This is SYNX Corporation. Is an American multinational corporation that provides B2B IT services. Founded in 1980, out of California, and they have 250,000 employees. Paul, this is
biting my lip. It hurts.
Like multiple times you bought.
Yeah, like I was like trying all weekend. I was like picking at my lip.
Picking is bad, right?
Yeah. All right.
SYNX Corporation, Paul. Let's go. I don't even know what this is.
$6.5 billion. PE of 13. Check mark. Sick profit margin of 2%.
Adorable.
Their gross margin's 10%. I don't get this. Dividend yield. What do we think about this, Uncle Seth?
0.16. So adorable.
$10 million dividend yield. Okay. Cool. Next, let's go.
Off the request line, SYNX Corporation. Let's go to revenue growth over the past 5 years, Paul.
14.5 to 24.5. Check mark. How do they only make 2%? There must have been some write-off or something. Check, please.
Okay.
No. Look at his net income. 250 to 495. Check mark there.
Yep.
Wow.
I mean, they must not hold any inventory. It must be all, I don't know. Shares outstanding. Oh boy. This is a big X. 39.5 to 51.5. But look at this. Between 18 and 19, they went from 39.7 to 50.7. So they probably had some acquisition along the way, but they are still increasing their shares outstanding little by little.
Current assets over current liabilities is pillar number
6.8 billion versus 3.97. In fact, they have total liabilities of 5.6. So you have to deduct $1.2 billion from their market cap. Their market cap was
6.5.
6.5, so it goes down to like call it 5.5 to be conservative.
Okay, we're adjusting that market cap for the money they have saved up in the bank.
Yep.
Pillar number 7 is free cash flow growth, Paul.
Negative 113 to 1.65. Check mark. Jesus, this is all over the board. How did they do 1.65 last year?
Owen, will you tell us why you love this or why you came across this? This is an interesting one here.
They had a couple of negative years here. They have negatives here and here. So maybe this is a good reasonable, let's call it 460 times 20. Oh my God, this is selling for like 10 or 11 times free cash flow in the last 5 years. 3.5 times current free cash flow.
What do you think?
I mean, that's a pretty incredible number. I'm trying to figure out why that is. Yeah, it's selling for 14 times the average free cash flow in the last 5 years, with an incredible jump in free cash flow recently.
When COVID hit, this went down to $35, $33 a stock.
Wow.
Now it's up to 130.
Wow.
Interesting. Mo, are people trading this over there in a bid and ask?
I mean, it's incredibly overbought at this point. You can see that you got in that overbought area, and it's just been going sideways, but the stock price has been climbing. So if you're in it, stay in it. If you're not in it, just be careful with it. And also notice earnings are 624. So just be careful going into earnings. If something happens with this and bad news comes out or whatever, hell, even if good news comes out, you can end up down here and lose a lot of your gains. So make sure you have a stop loss on this thing because it is a little bit more risk on when you are trading in this area of the stochastic.
Risk on, risk off.
Just a reminder, everyone, we are taking donations, $50 donations to take individual stocks, and the donations will be going to the Akron Children's Museum here in Akron, Ohio, which is very near and dear to our heart, Paul. And you're moving back down into the heart of Akron, one of the most famous streets in Akron. I mean, we love this place, right?
Oh, I love it. I'm excited. I'm moving in sometime this month. Mo just bought my house yesterday. You want to hear a funny story, by the way?
This is a good story.
Yesterday at 4:19 p.m., I got a text from our good friend, the show's good friend, John Dyer.
Of course.
John texted me and said, Paul, your house is closed. Mo owns your house now. Great. 4:22 p.m.
Uh-oh.
3
3
minutes
minutes later, I got an email from somebody. Paul, are you interested in selling your house in Galloway? I said, give me a call. So he called me a couple hours later, and he goes, Paul, somebody came and knocked at my house. The only house I'm willing to move to is yours. You want to sell it? I go, what price are you thinking? He goes, I don't know. What do you think? I go, you have to have an idea in mind. He goes, I don't know. What about the Zillow value? I go, come on, Zillow value for a home like this? He goes, yeah, you're right. He goes, listen, I was buying it for blah, blah, blah 8 years ago. I was hoping you want to move out. You do the same deal. I go, well, let me tell you a little story. And I told him, I go, literally 3 minutes before you emailed me.
Was he offering more or less than Mo? Would you undercut Mo instantly?
He wanted a screaming deal. It was still more than Mo paid me. But I told him, yeah, not going to happen. I go, Mo wasn't open to selling, but I told him a price that he was like, oh, so you want the price. I go, yeah, if Mo's going to move and put up with it, he wants the price.
Yeah. Yeah.
But anyways, now look at the interesting thing here. I put SYNX into our value sheet. I'm decreasing the share buyback. So let's say they just keep the number of shares the same. I have a price today of pretty much where it's at today. You can make a 10% return on your money based on buying it for this level today. That's interesting. Because it's all about these share buybacks. It's all about these share buybacks. This share buyback looks so high because they made that one acquisition and jumped up big time. Other than that, it's probably more like this. So the stock is pretty close to where it should be at some point. If you want to make a 10% return. Now, you know me, guys. I'm not trying to make a 10% return. I'm trying to make a 12 to 15% return on every stock I buy. So I want to buy it at $96 a share. All right? So I'll be honest with you. For me, I have to go understand the 10K and understand why their margins are so low. Their gross margin is only 10%. Their profit margin is 2%. It tells me there's some sort of like middleman on something. I don't know what they do, but it's something that I can't get a good margin on, which is not the worst thing in the world, but you have to understand how they do they're a recent company. Go see how they did during recessions.
Mason said, different Mason, he said that would have been hilarious if Mo would have day traded your house.
Yeah. I was trying to get him to. He didn't want to. He's like, no, I want to move in. I'm like, Mo, when somebody knocks on your door and says they want to buy something, you listen.
We've been going at it for 42 minutes now, which is 4 times as long as Paul can go in the sack. And we're getting a little, we're raring and ready to go here with some more stocks. And I would say, Paul, the people we're underplaying the Patreon, Paul.
We're underplaying it?
Folks, we did show either with last week a bill for $200,000 that Paul's brother signed to get more data for you, the Patreons, all 3,000 of you. We are diligently working on getting you more out of the software, giving you more and more and more. In comparison, I'm telling you, look around other financial YouTube channels. You literally get a 1-hour Zoom chat for the same amount of money. You're getting the software. You're getting the retirement calculator, soon to be real estate calculator. It's absolutely incredible. And Paul, before you cut me off, we're giving away a Tesla. Good Lord. In the next 3 weeks, if maybe not sooner, one of our patrons will be driving a brand new Tesla Model 3 when we hit 50,000 subscribers. A ridiculous giveaway compared to other channels.
So the other thing I want to talk about is I'm very big on exclusivity, guys. At some point in the future, I don't know when, I'm going to cap the number of people who can subscribe to our software. It'll be capped. And the only way I increase is if maybe, for example, every 5 people that signs up for the software in an email, I allow 1 new entry. Or if somebody leaves the software, it allows somebody else to buy in. I'm very big on making software exclusive. We do the same thing for Dynasty Owner. I want to have a community that values what we're doing. I love the fact that somebody just said we're not pressing the Patreon enough. The software is incredible. It's awesome. It's only going to get better. The community is incredible. It's awesome. It's only going to get better. So my goal is to cap the subscribers to our software at some point in the future. We're not there yet, but at some point in the future, Because again, I make plenty as it is. I want to make sure it's a good community of people who really believe. I look at a group like StockMo, and his Patreon level has dropped in half in the last few months. That's not what I want. We obviously provide a lot more value than he does. He just, doesn't, well, anyways. I'm sitting here saying I want to provide the value and make sure the people who do value it have a secure spot in that place. And you want out, you want out. Things change. Things happen for a reason, whatever. Allow somebody else who values it to come in and get their spot.
Yeah, Frenchie is saying that the only downside of the Discord is a gross guy chatter. I would say we are 94% male, so there is a little childish. I mean, we're children at heart, right, Paul? I mean, probably say ridiculous stuff.
I am the most immature, soon-to-be 40-year-old that's out there.
Yep. Okay.
Should we do the shorts? Guys, I bought shorts this weekend.
Tell us about it.
I spent some money on shorts this weekend. I went to J. Crew, and I bought some. I'm going to be wearing swim trunks here soon because there's some really cool designs on swim trunks. So I decided to start wearing some swim trunks here. These are J. Crew.
Look at this. The frothiness,
they're good for working out.
The buttermilk skin, the calf muscles. Look at that. Look at that tush. Oh yeah, this is really crazy. So anyway, that is Paul's take on his shorts, which got a little creepy there for a moment. But yeah, super sexy. And I know that the Everything Money Sugar Mama Susie is loving the shorts section of the. All right, next stock we're gonna do, Paul, is Dollar Tree.
Oh.
Good old Dollar Tree. The ticker symbol is DLTR. DLTR, and we're gonna take this one nice and slow because everyone knows about this. Formerly known as Only a Dollar. It's an American chain of discount variety stores that sells items for $1 or less. Headquartered in Chesapeake, Virginia. It's a Fortune 500 company and operates 15,000 stores in the U.S. and Canada. This is
and
huge.
By the way,
Dollar Tree.
That's another thing coming very soon to the software. Company descriptions. That's coming to the software this month. They'll be at the bottom of every page, of every main page. Look at this chart from 1996, Seth.
Back in the day, you and I were freshmen.
$1 when we were freshmen in high school. Literally, no, 1985, we were 8th grade. $1.16, $1.17. Now it's at $100. Amazing growth. Okay, guys, $23 billion company, 16 PE, check mark, understandable profit margin. It's an X, but they have good gross margin of 31%, but a bad profit margin of 5.7. No dividend, and not so great return on assets and return on invested capital, but that's all right. Income.
Profit growth, revenue growth over the past 5 years, Paul.
20.92, 25.7, check mark. Guys, with 15,000 locations, I want to know how much they're growing and to see how much is from there. So 15,000 locations, guys. Mm-hmm. We have $25.7 billion in revenue. They do an average of about $1.7 million per location per year.
Is that a lot or a little?
I mean, that seems like a lot. Doesn't it?
Yeah, is this good growth or slow growth for a company of this magnitude?
Oh, I think this is good growth. That's why I wonder how much of it's from new locations. Because I'm surprised to see that. With such a big company, you'd expect it to grow with about the economy size. And when times are good, a store like Dollar Tree is not going to do as well. Because people can afford to go spend more money and not look for deals. When times are bad, they're going to do even better. All right? Net income.
Profit growth over the past 5 years, pillar number 4.
864 to 1.47. Check mark there. All right.
Good.
There's one big drop here. I guarantee that big write-off. There it is. Big write-off of $2.7 billion. It tells a story, guys. All these things we teach you are telling you a story.
Oh, Dollar Tree bought Family Dollar, by the way, Ian saying. I didn't know that.
When? What year?
No, tell us. Somebody look it up. Let's go to shares outstanding is pillar number 5.
236 down to 233. Check mark there.
Check, please.
Okay.
So they are slightly buying shares back. Balance sheet. I imagine this is going to be negative. 5.3 billion to 3.9. Check mark there. Good.
2015 is when they bought out Family Dollar.
Okay. Cash flow statement. You ready?
This is free cash flow?
Yep.
Here we go.
1.29 to 1.43 check mark with an average of 1.12 times 20 equals 22.4 billion. Is that it is?
Actual market cap is 23 billion.
So it's about there if you're willing to pay 20 times free cash flow. I don't know. Let's put it in our, why don't we have Mo go over there and do that? So wait a second, really quick, actually time out. Here are the 8 pillars, guys. This is barely an X, but it's an X nonetheless. We have checks all the way around with profit margin being understandable for being low.
Yeah, and actually, that looks like somewhat high profit margin for retail, Paul. What did you think? We remember seeing supermarkets in the 3 and 4.
Well, that's supermarkets. Let's go to Gap and see what Gap's is. Well, that was bad last year. But usually Gap is, let's see, 2019. $16.5 billion and $16.5 billion. That's about 6%. You're about right. That's about right. You're right.
Okay. Do you want to head over to Mo or get after Mo? Are people? How does
you mean Paul? Will you stop talking? Is that what you're asking?
Yeah, sure. How does Dollar? Oh, this is Dollar Tree you're pulling up right here.
Yep.
Oh Lord.
So this is a great example of every time you get a gap, it fills. See, it filled. Every time you get a gap here, it filled. Every time you get gap right here, it came back down and it filled. So I pull this up and I say this because I always say the gaps fill. Here's a prime example of that. Now, they just recently gapped again. So last week there was a gap down. So I assume that that thing is going to fill eventually. So this might be one that you want to throw on the watch list. Earnings are not for a long time, so we don't have to worry about any gaps. Hopefully this thing turns up into the sweet spot, fills that gap, and we can make some money coming up to this 117, 115 area. So there's another one. Throw it on the watch list. This is something to watch. But this is a great lesson of gaps always fill. I don't know how long it takes, but they're going to fill. You can see that right here.
So another learning lesson here, guys.
Go ahead.
I'm looking at this. I put my data in 10%, and it says $50 on the high side. I go, what? It's only a 16, 17, 18 PE. What's going on? Then I look at the story. 5-year average profit margin, 2.8%. Last year, 5.3%. Remember, there was a big write-off in the 1 year for $2.7 billion. So I immediately discard this 2.8%. I'm going to change this to 5%. And look what it changes the price to immediately. Boom. This is the price, 63 to 91, assuming a 10% return and 15 times PE. So it's probably worth somewhere in the 70 to $80 range for a reasonable assumption for price. Maybe a little bit higher because as the economy slows, we're in a booming economy, it might make more money, it might grow better. So maybe right now is a reasonable price for the stock, I don't know. The point is, we're not that far off with Dollar Tree. We're not that far off. And this is why you have to pay attention to this data, because you look at this and you thought to yourself, oh my God, it's 2.8%. That's why in our software, you're going to enter the profit margin yourself. It's going to tell you the last 5 years, the last 10 years, and the last year. You enter your own assumption. Because this immediately, I was like, wait a second, how is the profit margin so low? This is an example of me discarding this profit margin because they had a $2.7 billion write-off. Now, you need to go understand what that write-off was for. Go figure out what that write-off was for and make sure it's not a recurring problem they have internally. This is awesome. These are the things I love doing when I see like issues to teach with.
Paul, I want to take a short memoir out of my mind at the moment. Folks, I went almost 12 years investing in stocks, and all I ever looked at was the ticker. I would buy it and then just hope it went up, right? If you're like me, I'm just astounded to see these two guys in front of me and teach me. Paul, I've said, regardless of 500-600 people watching, I feel like you're just talking to me when I'm paying attention. But the amount of thought that goes into some of these companies is astounding. These graphs, these charts, it almost, when I hear people, when I hear normal people talk about buying stocks or day trading, I literally just start chuckling inside, knowing they're probably not doing all this stuff. And it's just really insightful to see in person. And I hope you're getting this too if you're watching at home. So,
and we got a great question here. Somebody said, how important is profit margin? I'm eliminating that pillar. It's the least important pillar out of all of them. I have already thinking about other pillars I want, and I'm also changing the total current assets over current liabilities pillar to something other debt related, a ratio of total debt to revenue or something like that, because these are more important things as I read more and more and understand more about business. These are more important. We have 8 businesses upstairs, and I prefer, the reason the profit margin came up is I prefer businesses with higher margins. There's more latitude. Higher margins with a lot of barrier to entry is a phenomenal business. Something like Microsoft. Very, very high margins, and how do you take over Microsoft? How do you get the world off of Microsoft Office, Microsoft Windows, all that stuff? It'd be very, very difficult. They have a very high moat in that regard. So I do ignore profit margin the most. I just like to know it from a standpoint of just having an understanding for it. I look at gross margin a lot, things like that.
Mo, the offer still stands, Mo, to join the BidNAS on a trial month. Is that true? Oh, I'm sorry, Mo, say that one more time.
You get 30 days to come into the BidNAS Nation and try it out. If you do not like it, which you will like it, I don't know how many people we've had go back, but you can go back to whatever price you're paying. So if you're paying $23, you go back to $23. If you're paying $8, you go back to $8. 30-day trial. Try it in the Bid and Ask Nation, and we are reorganizing that thing. I'm working with Tim right now, and it's getting a lot better, a lot more streamlined.
Okay, this next one, Gary donated $50 to the Akron Children's Museum, and he wants to see, Paul, we did this before, and we haven't done it in a while, and I think you're going to be shocked by the numbers. This is Ingles Supermarket. The ticker symbol is IMKTA. This is a southern supermarket chain based out of North Carolina. They have almost 200 stores, and Paul, we analyzed this a few months ago, and look at his stock chart since we talked about it. This is Ingles Supermarket.
Well, when did we do it last?
I'm going to look it up. Maybe Tim can help us out when we look it up. It's been a couple months, though, and look at this thing rise
Well,
up.
a couple months, it's still flat.
Okay, I thought we might. Oh, I see. Sorry. What was that, Tim?
I'll tell you.
Thanks. Tim's going to tell us when the last time
All
we looked at
right,
this.
market cap, 1.3 billion, PE of 5.7, so it's the same as it was before. I remember it being very low. Profit margin of 4.76, that's an X. That's a pretty healthy profit margin for a supermarket. So we have a check here, an X here, 1.3% dividend, pays out $17 million a year, okay? Return on assets, double digit, that's pretty awesome. 5-year return on invested capital, 6.5%. That's not that great, but that's okay. We're gonna, yes.
End of April, we looked at it.
When was it? April 30th? So it's not the same.
Why do I feel like 2 months feels like 6 months?
Because we do a lot of things on this channel.
17 videos a week. Oh my gosh. Okay, keep going, Paul.
All right, 3.85 billion in revenue, 4.76 check mark. Again, go find out how much of this was organic growth, same store growth versus new openings of stores. Very important metric to look at when it comes to any sort of retail.
How about profit growth over the past 5 years?
450 to 226. This is why they have the low PE. Guys, their profits skyrocketed last year because people had to stay home, right? People had to stay home, had to buy groceries from home. They couldn't go out to eat. That's why their profit was so big. That's why their margin's so big. Their margin shouldn't be 5%. Shares outstanding, 20.26 down to 20.2, so a check mark there.
Current assets over current liabilities.
497 million versus 294, check mark there.
Wow, here they go.
Now, free cash flow. I'm probably gonna, oh, interesting. This is interesting. Oh, look at this. This is weird. 41 to 154, check mark. They had 2 years in a row of 154, which is good. But look, they never had that before, or even close to it, Tim. What's your name?
My name's Seth. I'm the host of Everything Money.
Yeah. So this one's confusing for me. What was the market cap? 1.3 billion?
1.3 billion.
So it's currently selling for 20 times the 5-year average. The question is that reasonable? What is this free cash flow going to become? Keep in mind, they did 154 the year before that, before COVID. Right when COVID ended. Yeah, this is a stumper. Just look at this, 1.5 million over here. That's poop in the butt. You know what I mean?
Oh my gosh, yeah.
So you sit there and go, okay, this is part of due diligence, guys. What happened here? Because they had a pretty reasonable operating cash flow. Here it is, deferred taxes. Change in receivables. Okay, those are the issues. Change in working capital. All right, so maybe we should have a $70 million free cash. So it's a check mark on price to free cash flow still. Profit margins at X, so it's an 8-pillar stock. The question is, do you believe that these numbers are going to continue to grow like this? With COVID being over and people going back to restaurants? That's the question. So IMKTA. Oh, wow. As is, it has it worth all day, the current price. If you think the future is going to, so look at this. Look at the profit margin by year, guys. Oh, this is assuming the low profit margin too. So revenue growth. So it assumes this profit margin going forward. This might not be bad. 5.5% revenue growth. That's what you got to figure out because there was a lot of revenue growth in the company. Figure out how much of it's organic. If it's majority organic, then I would just discount the, it might be selling for what it's worth, guys, at 10% net present value. And increasing the multiple from 5 to 15. Might not be bad, guys. This might not be bad. Interesting.
Just 7 months ago, the stock price was almost half, around 34, 35 bucks.
Isn't that incredible?
Yeah. Mo, are people trading this, or should they be?
You know, it did a sweet spot reversal yesterday, so it's technically an uptrend right now. The issue we have is we need to have some engulfing candlesticks, so candlesticks that look like that, big green candlesticks over here. We need something to get this thing moving, and I don't know the volume, but we need to see the volume. And this is its all-time high, so we're going to have to break out over that level. If it does do that, this thing definitely has room to run, and it's something to keep a watch on because of where the stochastic is at. If you want to, throw it on a watch list, but because it's getting up into this area and it really can't break through, it's been going sideways for multiple months, like Paul was saying, probably better options out there, but it's not the worst thing that I've seen today.
So guys, here's a chart to move on to another topic. Seth, do you mind?
Yes, go ahead.
I'm sorry.
No. There's so many funny comments. I mean, go ahead, Paul.
Bitcoin, guys. Bitcoin's at 32,000. It's still way higher than what it was a year ago. Way, way higher, but it's fallen in half from its peak. If this is the idea of stability to you, this should be the indicator that Bitcoin is not some currency we should. Do I think cryptocurrency might have a future? Yes. But that's like in the internet days, the early car days, early airline days, saying every car business, every airline, every internet company was going to be successful. It's not the case. It's just too much volatility here, in my opinion. We caddied the other day. Oh, by the way, I kind of got recognized for the first time ever. I wrote that in the chat, didn't I?
I probably didn't read it. Go ahead.
We had an event last Friday for the first tee of Akron, and our caddy from last year came up to me. He goes, "Hey," I go, "What's up, man?" He goes, "You were on a Tom Nash video." And I laughed. I go, "Oh, he loves Tom Nash." I'm like, "Well, Tom Nash is a moron, but he recognized me and he doesn't follow our channel." But either way, that had to do with it. Oh, he goes, then while we're walking, he goes, "By the way, I'm assuming you're not into cryptocurrency." I go, "That is correct." And of course, he's a 19-year-old kid who said, "I think Amazon's the only company to buy because they have such a." I was just like, "Okay, any price?" He goes, "Well, not any price." I'm like, "Well, then what price is reasonable?" He goes, "Like, I think today's price." I'm like, "Okay, so if it doubles tomorrow, you're not going to buy, right?" He's like, "Well," I'm like, "Okay, so you have to understand fundamentals."
I mean, I guess you've taught me I just don't need that malarkey in my life. I don't have to go to bed every single night hoping that my crypto coin goes up or down based on zero fundamentals at all.
Correct.
So, people would argue that there are some sort of fundamentals, Paul, and we just don't get it. But again, we don't get a lot of things, and we're just. If you also don't get it, then you can get it.
I think we do get a lot of things.
No, I get the whole
argument.
idea of momentum. I'm just sitting, and growth. I'm just sitting there saying I'm not going to overpay for it. It's just a calculation. Let's look at it this way, guys. Look at how much look at this, guys. For everybody says I don't care about growth. This is IMKTA. Okay, you know what? Let's go to a stock. Let's go to Amazon. According to this, Amazon is worth between $783 and $1,800 to me. Revenue growth of 30.9%. Let's make it 200%. Guess what? I'm a buyer of Amazon. Let's make it 0%. My price falls to $369. For those of you who don't say I don't care about growth, here it is right here. Make it 50%. Okay, that's all I'm sitting here saying, guys. There's a price to be paid for growth. What most people do, though, is they see 30.9% and go, "Oh my God, it's growing like crazy, I had to buy it." They don't factor in the fact that that growth will affect their values in the future. Same with share buybacks. I'll keep everything the same. Let's say share buybacks are, let's say they issue 10% more shares per year. It changed my pricing big time. Let's say they buy 10% back per year. Changes my price big time. That's the point, folks. You've got to remember that these are all part of the calculations we do. It's numbers in and numbers out. That's all, assumptions in, response out. That's all we're doing here. That's it. Any investment is the present value of all future cash flow. When they're decreasing the shares, they're increasing your cash flow per share. When they're issuing shares, they're decreasing the cash flow per share. They're issuing amongst more people. That's all value investing is deciding how reliable is this future cash flow? Can I project it out? And if I paid this price, what would my return be? That's it.
Alan has a great question. Paul, do you have a checklist to say 10 questions or more that you assess companies on after they meet our 8 pillar checks?
No, I read something the other day where a value investor guy has a checklist book, and I'm reading it, and he says you should research a company for over a year sometimes before you buy them. I disagree. I believe, my personal opinion is, I think value investors care too much about management. That doesn't mean I don't care about management. I just think it's very difficult in big companies to have really good, across the board ethical people. And ethics and morality are very subjective. Look at Bill Gates lately. All of a sudden comes out he's been cheating on his wife for decades. A lot of people would say, well, I would never invest in that guy because the guy's going to cheat on his wife. Somebody said to me recently, oh, they cheat on their wife, then they're not a good, then you can't trust them. Hey, welcome to the world of then you can't trust 95% of the CEOs in the Fortune 500, because I once remember reading an article where they said Fortune 500 CEOs cheat on their spouses more than NBA athletes do. At some point, you got to sit there and say, I want to look at the CEO and management team and say, do they operate the financials of the business in relation? Is it good management looking at that? Not good management. And I think ethics and morality are very, very subjective things. So look at how they handle the money of the business. That's what I want to focus more on. And somebody might sit there and say, well, that is good management. Sure, but I don't hear people talk about that very much. Let's focus on what financial decisions they make. There's no set checklist of what I look for. Since I understand so many businesses, because I have business upstairs, I get a feeling for it when I read it. And I hate saying that, but I look at it going, okay, what about, you guys see me when I look at the financial statements. I immediately have questions. I go, okay, what about this? What about this? What about this? It's not because I'm brilliant. It's because I've been around it long enough. I've seen how businesses run. And I go, wait, why do they have a big loss this year? Must have been a write-off. Whoop, there's the write-off. Why do they have more shares all of a sudden jump up? If it's consistent shares increasing, that's different than a big one-year jump. Things like that. And my throat hurts.
Yeah, I think that's a show, guys.
That's the show. It's only 12:05. I wasn't saying that's the show. I'm just sitting there saying my throat hurts.
Oh, okay.
Have we done 5 stocks?
We've done 6 or 7.
Oh, great.
1, 2, 3, 4, 5, 6. We've done 6.
Why don't we just do Q&A for a few minutes?
I was going to say, Paul, for the people who joined late, I started the show like Logan Paul did this past weekend. I brought the trading card necklace to wear. So I'm flaunting my game instead of Pokemon. Paul, talk about upgrades to the Everything Money website that our patrons are getting.
What do you mean?
Upgrades to the software, my apologies, that's coming in the near future.
Oh, it's posted in Patreon and Discord. We're going to have the app coming out soon. We're going to have the stock analyzer tool. We're going to have foreign stocks. We're going to have company descriptions. We're going to have real estate calculator. These are all coming out this year. All of them coming out this year, some sooner rather than later.
And Mo, talk about what you're doing in the morning besides giggling along with comments.
These people are so funny. Every morning from 9 to 9:30, I do a morning show. It's all the news of the day. We'll throw in some trading, this and that, but it's great. It's very interactive. I love doing it, especially on days where there's a lot of news, like yesterday and today. That was fun with the Biogen stuff. Yeah,
for sure. Paul, Derek is asking, when do you decide you want to sell? You guys talked about in the Stock Mo bashing video, he talked about how he got to a certain point and didn't take profits.
Wow.
I'm not an expert on this, Mo. So,
yeah.
Paul,
well, when you're looking at say Intel, for example, I don't remember exactly what Paul's top number that he found today was, $98, whatever. As soon as it gets to $98, that's our top of our value. Anything over that, it's going to be overvalued unless the environment has changed. If we go back and say, oh, maybe it's worth 105 now.
So once it hits the 105 is a high number.
There you go.
I have 105 as a high value for Intel.
So when the stock price gets really close to that 105, we're going to start selling very aggressive covered calls to collect a lot of premium and exit the position. Now, these are our individual picks. They're not part of our personal magic formula. That we're just letting ride. This is our individual picks, and I hope that's what you're talking about as far as taking profits on things.
Yeah, for sure.
Or selling the positions.
Yeah.
And guess what? If we like Intel, and it all of a sudden, look, in the last year, Intel's price has gone up for me by 20%.
That thing recently for us was $80 on the high side.
Yeah.
Now it's 105.
Now it's 105.
So
why?
Things
because
change.
Things change. We got, okay, well, I'm not as worried about AMD anymore. I'm not worried about this. They're buying back share. And I even discounted the share buybacks quite a bit here. Actually, down to 10%. So actually, if you do share buybacks, only decrease it by 50%, it has a minimum of $64 a share for my low price. Remember, none of these things are you must do it if it has hits. It's more of, okay, it's sitting at a level here that I like. Every value investor will tell you, most companies that are selling at a discount are selling at a discount for a reason. Your goal is to find, out of the ones that are selling below what you think they should sell for, the 10 or 20% that have just a mispricing of information. That's it.
Mo, do you think I should take profits on Biogen?
As a part of your magic formula?
No.
Then, yeah, probably. I mean, if you ever get something like this is insane. Consider yourself lucky, because that's exactly what it is. It's luck. So yesterday when people were asking me, like Tim was asking me, what should I do? I didn't even hesitate. I just looked at him. I just go, sell. At least take profits. This is pure luck. This doesn't happen every day. So if you're getting something up here with a movement that fast, for example, sound like Paula. When we took Southwest, I sound like Paula. For example,
Selling Paula?
I sound like Paula.
Your girlfriend Paula.
Well, she has a boyfriend now, by the way.
Anyways,
Oh boy.
like Southwest, we were looking at that thing when it was $25 a share or something. And when it was moving up, it moved up so quickly to $40. We were just like, this is crazy. Things don't happen this fast that are normal. That's why we ended up selling that around $40 or $45. So when you get massive, quick movements, consider yourself lucky. Take your profits. You can always reinvest when the stock price pulls back down like it's doing. It's already down half of what it was yesterday during that big run.
Thank you to Jude, Joey, Michael, Jobert, D Student, Balpreet, Marco, Rico, and Garrett for signing up during our show. I think it's going to work out very well for you guys. We appreciate your support, and you guys are doing a great thing for very inexpensive 80 cents a day. You're getting amazing software that's going to change your financial future.
What else, guys? Other questions. I'm trying to take profits right now on Biogen, and Fidelity's giving me some malarkey. So.
New sub. Thanks, Joseph. Welcome.
Yeah, good to see you guys. Intel
to the moon.
Yeah.
Okay, we don't want stocks that go to the moon.
Oh, this is interesting.
We just want stocks that grow gradually.
Paul
Do you guys consider
Paul has better shorts
leadership
than
changes?
Paul
Yeah,
is-
we do. Nick asked the question, how much do you guys consider leadership changes when it comes
I probably
to a
should
company?
care about it more. To me, I just feel like, guys, it's like a moat. Warren Buffett talks about a moat. It's impossible to have a moat forever. So when he says moat, I'm like, do I really care about moat? I don't personally as much. Do I like a moat?
It's great.
Sure.
Yeah.
Of course, but
It's not the end all be all.
yeah, I think it's a good thing to say, just like leadership. Oh, I really care about leadership. A new leader comes in. Okay, I'm a big believer in, they might have come from a company where they did awesome, but how many times have leaders gone from one company to another and sucked completely because it's a completely different industry and all that?
Big time.
I just look at it saying, I want to find a fundamentally, this is the attribute that I think Warren Buffett, I do agree with. We want businesses that can be run by an idiot because eventually it will be run by idiots. So when he says that, I laugh going, so you want great management, but then you acknowledge that someday the business will be run by a moron. I look more about the company's financials. Are they just doing things in general that make me look at it going, yeah, they get it, and grow from there. That's it. And I want to buy them at good prices and sell them when they hit the prices. Done.
Okay, I just sold my Biogen, so
Did you?
it gone. 20 shares. See you, baby.
What was it at?
Oh, 380 something.
390 basically. Nice.
Great.
So
I feel great about it.
I'm sure this thing is going to pull back, like we talked about in the video that we made earlier today, and you're going to be able to buy Biogen at another time. This is ridiculous. What's happening? It's flat out ridiculous.
Varun, it's $24 a month. It is monthly. Yes, you get the access to the software, amongst other things, for a monthly payment. That's true. Jacob, I see you there. Love you. What else are we gonna say? Oh, guys, you mentioned something. Who bought some more planes? Boeing is gonna make some planes for somebody.
Southwest has bought a bunch of 737 MAX 7s or whatever it's called.
Yeah.
They bought 24 of them, I think.
Nice.
This
People are starting to buy planes again.
This is great news for my DGF spray, Paul, because
Yeah.
Boeing is our biggest client. So hopefully they'll make a big order.
Yeah.
And okay.
All right, I think we're done now.
Okay, Paul. We are done. We love you. Nate, you can cue me out, baby. Thursday, patrons only, 2 p.m. Top tier patrons. Those top tier, the Bid and Ask and Paul Shorts, will see you get your own live stream. And the Fireside Chat is a week or so away. Friday, June 18th at 6 p.m. is the Fireside Chat. We will be here taking all of the Patreon questions. We love you. We'll see you in the morning. We'll see Mo in the morning at 9 a.m.
Yep.
And that's what take, guys. Big videos coming out this week. Join the Patreon if you haven't signed up quite yet. And you know I love you. See you, Paul.
See y'all.
Adios.